The U.S. economy is on the verge of a significant shift as imports are expected to surge to their highest levels in 2 years this summer. This upturn indicates robust supply chain resilience, even as the global market navigates various challenges. Retailers are preparing for an optimistic sales outlook, backed by substantial inventory planning. Concurrently, consumers are showing a mixed but improving sentiment about their finances, even though long-term inflation remains a concern. As we delve into this promising yet complex economic landscape, one question arises: how will the interplay between consumer confidence and inflation expectations shape the future of the U.S. economy? U.S. economy news today: imports expected to hit 2-year high this summer. Welcome to Investopedia's Economics Live blog, where we dissect daily news to shed light on the state of the U.S. economy and its potential impact on your financial health. Here, we synthesize data releases, economic reports, expert insights, and other pertinent information to explain economic issues and their significance. Rising imports signal strong supply chain and retail confidence. The latest reports suggest that monthly cargo imports are on track to reach their highest levels in 2 years, a positive indicator of robust supply chains as retailers gear up for increased sales. The Global Port Tracker, a collaborative effort between the National Retail Federation, NRF, and Hackett Associates, reveals that as of April, U.S. port cargo volume was over 13% higher than the same period last year. This upward trend is expected to continue through the summer, with June's cargo volumes anticipated to be 15% higher year over year. Jonathan Gold, NRF's Vice President for Supply Chain and Customs Policy, expressed optimism, stating, "The high level of imports expected over the next several months is an encouraging sign that retailers are confident in strong sales throughout the remainder of the year." Despite some external challenges, such as concerns over the potential collapse of the Francis Scott Key Bridge in Baltimore and attacks on shipping in the Red Sea, the influx of shipments remains steady. Economists at Wells Fargo have highlighted these issues, which could potentially disrupt supply chains, yet retailers seem undeterred. Several factors contribute to this steady stream of imports. Retailers are anticipating continued robust sales, with NRF projecting growth between 2.5% and 3.5% in 2024. Additionally, the peak season for shopping has extended, compelling retailers to maintain higher inventory levels. According to Ben Hackett, founder of Hackett Associates, reasons for this trend include restocking after strong post-pandemic sales, preempting increased tariffs on Chinese goods set to begin in August, and preparing for the holiday season amid strong consumer demand. Consumer sentiment, balancing optimism with inflation concerns. The New York Federal Reserve Survey of Consumer Expectations offers a nuanced view of consumer sentiment in May. While there is a notable improvement in the short-term outlook on inflation, long-term expectations remain a concern for consumers, a factor that Federal Reserve officials closely monitor. The survey indicates that consumers expect prices to increase by 3.2% over the next year, a slight improvement from April. However, looking further ahead, inflation expectations remain mixed. Consumers foresee a 2.8% rise over 3 years, but this jumps to 3% on a 5-year horizon, suggesting persistent long-term price pressures. Federal Reserve officials pay close attention to these sentiment surveys, as consumer expectations can significantly influence actual inflation rate. Chicago Federal President Austin Goolsbee emphasized that 5-year consumer inflation expectations might be a more accurate indicator of inflation's trajectory compared to short-term survey results. Meanwhile, expectations for home prices show a predicted increase of 3.3% over the next year, with predictions for gas, food, and rent remaining steady from the previous month. The survey also reveals improved consumer confidence in household finances. A notable 78.1% of respondents expect their financial situation to remain stable or improve over the next year, while 40.5% anticipate a rise in stock prices, both figures reaching their highest levels since 2021. A complex economic landscape. These developments paint a complex picture of the U.S. economy. On one hand, the surge in imports and the positive sentiment about household finances suggest resilience and optimism. On the other hand, Persistent concerns about long-term inflation and potential supply chain disruptions highlight the challenges that lie ahead. Retailers' confidence in strong sales and the steady influx of imports underscore a robust supply chain, essential for maintaining inventory and meeting consumer demand. However, external factors such as infrastructure issues and geopolitical tensions could pose risks to this optimistic outlook. Consumer sentiment is a crucial component of economic stability. While short-term inflation expectations have improved, the long-term outlook remains cautious. The Federal Reserve's focus on these expectations underscores their importance in shaping monetary policy and economic strategies. As we navigate this intricate economic landscape, the interplay between consumer confidence, inflation expectations, and supply chain resilience will be pivotal in determining the future trajectory of the U.S. economy. The path ahead. The current economic indicators reflect a blend of optimism and caution. The surge in imports and improved consumer confidence suggest a resilient economy ready for growth. However, long-term inflation concerns and potential supply chain disruptions remind us of the challenges that must be addressed. In this dynamic environment, the question remains, how will the balance between consumer confidence and inflation expectations influence the direction of the U.S. economy in the coming years? Share your thoughts on how these factors might shape our economic future.